Gold is often viewed as a safe haven that will protect you from inflation, market crashes, anarchy, and even the total failure of fiat currencies. Gold is often cited as having a negative correlation with stocks and a positive correlation with inflation, making it sound like an excellent diversifying asset to hold in portfolios. I'm Ben Felix, Portfolio Manager at PWL Capital. In this episode of Common Sense Investing, I'm going to tell you why gold's glitter does not earn it a place in your portfolio. Any investment can be placed in one of four main categories: cash flow producing assets, commodities, currencies, and collectibles. Gold has some limited utility in industrial production, meaning that it could be viewed as a commodity, and it may form a component of many collectibles, but those are not what drive the demand for gold. Gold is primarily used as a store of value. People buy gold hoping that they can sell it for more later. What gold is most certainly not is a cash flow producing asset. In a 2012 article, Warren Buffett created an excellent analogy to explain why this is important. He explained that the world's gold stock at that time was worth about 9.6 trillion US dollars. For that amount of money, explains Buffett, you could buy all of the cropland in the US, 400 million acres with roughly $200 billion of annual output, and 16 Exxon Mobils, each earning $40 billion annually. Still, after buying those assets, you would have 1 trillion US dollars in cash left over. Buffett explains that a century from now, the 400 million acres of farmland will have produced a massive amount of output, regardless of the currency regime at the time. Exxon will have produced trillions of dollars in profits for shareholders, while also growing its assets to be worth many more trillions. The gold, on the other hand, will have remained unchanged in size and will still be unable to produce anything. As Buffett elegantly describes it, you can fondle the gold, but it will not respond. Buffett's argument makes logical sense, but let's see how it holds up in the data. In a 2012 paper titled The Golden Dilemma, Claude Erb and Campbell Harvey examined some of the commonly held beliefs about gold. First, they looked at gold as an inflation hedge. They looked at gold returns going back to 1975, when the US came off of the gold standard, through March 2012, and found that gold has not been a good inflation hedge over the short or long term due to the volatility of its real price. They did find that going back to the era of Emperor Augustus, who reigned from 27 BC to 14 AD, gold has been a pretty good hedge for inflation measured by military pay. So, if you have a liability due in 2,000 years, gold might be a good way to maintain your purchasing power. Campbell and Harvey explain. In normal times, gold does not seem to be a good hedge of realized or unexpected short-run inflation. Gold may very well be a long-run inflation hedge. However, the long run may be longer than an investor's investment time horizon or lifespan. Inflation hedging is only one reason that people buy gold. I think it's probably even more common for people to buy gold because it is supposed to be a safe haven, an asset that will do well when everything else is doing poorly. Some people will tell you that it is possible to profit from actively trading gold as opposed to holding it. This may be true, just as it is true for other non-productive assets like Bitcoin. But this channel is not about trading strategies. I bet there are hundreds of YouTube channels dedicated to teaching you trading strategies for gold, and I bet that none of them cite the academic literature that we have discussed today. I will let you draw your own conclusions about that. Do you own gold in your portfolio? Tell me why and how you own it in the comments. Thanks for watching. My name is Ben Felix of PWL Capital, and this is Common Sense Investing. If you enjoyed this video, please share it with someone that you think could benefit from the information. Don't forget, if you have run out of Common Sense Investing videos to watch, you can tune in to weekly episodes of the Rational Reminder podcast, wherever you get your podcasts.